Hi, everyone. Welcome to the 112th episode of the Timing Research Show for November 14th, 2016. My name is David Kosmitter. I'm the creator of Timing Research, and today we will be discussing the 164th weekly report. So if you haven't had a chance to take a look at this one yet, just go to TimingResearch.com/reports, and you can download this or any of the past reports there. I have Dean Jenkins back to host today, so I'm going to go ahead and turn it over to him.
All right. Well, thanks, David, and thanks for having me back. I always look forward to this. I enjoy this forum. You managed to assemble some pretty smart people, some successful traders, and I bring my opinions, but I look forward to hearing what everybody else has got to say, and I usually learn something too. So I'm glad to be here, and this is a pretty exciting show. This is the first Timing Research show since the election results have come in. It's been a little chaotic, and I'm sure people on the panel have some opinions, and I'm sure people tuning into the show are looking for some information. So I'm really looking forward to it. So to get started, let's have each of the panelists introduce themselves. If you would each just give introduce yourself, who you are, and your company. Talk just real quickly about what you do, just in a minute or two. And we'll go ahead and kick it off with Roy Swanson of Steady Trader.
Hi, Dean. Can you hear me okay?
Yeah,
great.
Good.
Hi. So yeah, I've been a trading consultant for a couple of decades, and went out on my own with SteadyTrader.com about 2 years ago with my own system. And what we do is very simple, very conservative. We do short-term trends. We just try to get in the middle of a trend. We get in and out generally in about 2 or 3 days. Our average is about 2 or 3 days on a hold. And we just rinse and repeat, do that over and over again, several times a week.
All right. I like simple. I'm a simple guy too. Simple and repeatable. All right. We'll go next to Andrew Keene of AlphaShark.com. Andrew.
Yeah, Andrew Keene from AlphaShark.com. I trade equity options predominantly. I'm a pretty large trader. I can trade 500 to 1,000 options in a day. I was a market maker on the floor of the Chicago Board Options Exchange for about 10 years. I've written 2 books and 3 ebooks, and we have one of the largest live trading rooms in the world where people can come in, and it's a community of traders. It's an audio and visual for 8 hours a day.
All right, great. It's good to be back on the show with you. I always enjoy hearing from you, Andrew.
Thanks for having me on.
Yeah. And then Steve Lentz of OptionVue. Steve, tell us about you and OptionVue, please.
Yes, I'm Steve Lentz with OptionVue, and our educational arm is Discover Options. You can go to either OptionVue.com or DiscoverOptions.com, and we focus on the one-on-one options trading mentoring curriculum that we have. And OptionVue has been in business since 1983 with high-end options analytics. And then the Discover Options is the part where we help people get from beginning up to really advanced levels. We have money managers that are part of us, our student set, and we have professional options traders. And doing the one-on-one mentoring, I've been doing a lot of research and trading, but I've been really focused lately on volatility studies that are kind of unique for what's being offered out there right now.
All right, very good. Yeah, I'm more and more interested in some of the volatility stuff too. I think there's a lot there. I like it. And then we have a brand new panelist, first time on the show, and that's Jody Samuels of FX Traders Edge. So I look forward to hearing from you, and tell us about yourself, Jody, and your company.
Thank you. So FX Traders Edge is a global online trading school, and it's the home of some education. The Elliott Wave Series, Elliott Wave Mastery, and Elliott Wave Ultimate, 3 progressive educational training programs to assist traders of all levels in the markets. Can you tell what our specialty is? And that's because I started trading Forex with JP Morgan in the early 80s, and really there hasn't been a day since I haven't used Elliott Wave in my analysis. So that's our niche in the market. We offer education, we offer services, trading rooms, and primarily our clients trade off of a Forex trading platform, but we do have futures traders and stock traders as well, because on a Forex trading platform, if you're outside the United States, you can trade Forex, CFDs, and stocks. So our goal is to give traders the tools to navigate the markets with confidence by providing real-time coaching, using sound fundamental and technical analysis within an Elliott Wave framework. And we also provide daily wave counts on 13 different markets. But I just wanted to tell you about my new book. This is my latest accomplishment, and I'm really excited about it. Wiley published it. It's called The Trader's Pendulum, The 10 Habits of Successful Traders, and it's really of highly successful traders, and it's really my 30+ years trading experience. So you can Google it, Trader's Pendulum, 10 Habits of Highly Successful Traders. It's really got a lot of great feedback on it.
Super. Thanks, Jody. Glad to have you here. Look forward to hearing. It's good to have another Elliottician in the house, because I use Elliott Wave in my trading and as well, and I believe in it strongly. So I'm Dean Jenkins, founder of FollowMeTrades.com. I've been trading and investing for over 20 years, and I started off as a fundamental analyst. You know, had a business degree and studied all kinds of earnings reports and financial statements, and was completely frustrated about why that didn't work all that well. So I finally educated myself on technical trading, and now I'm primarily a technical trader. I do check a few fundamental things, but I believe strongly in technical trading, and I base most of my trading on Elliott Wave analysis, a very simple, repeatable Elliott Wave approach. I work closely with Bennett McDowell, TradersCoach.com, contributed to his latest book. Wish I had one to flash up too, it would be cool. But Elliott Wave Simplified, and I just believe in keeping it very simple. There's really only a few patterns to memorize that really matter and make sense. Again, I run FollowMeTrades.com. It's a service. We have a stock picking service. We have a live trading room, and then educational programs for Elliott Wave. I combine Ichimoku and Elliott Wave together. I call it East meets West, and when you get two systems like that that are based on different analysis, and when they agree, that's pretty powerful. So that's what we do, stock pick service, live trading room, and some education around Elliott Wave, Ichimoku Cloud, and some basic technical analysis. And it's really, really good to be here, and I'm looking forward to hearing folks' opinions and on what's going on in the market. So the very first question, let's just jump right into it.
Dean, I have one other thing I'd like to say before we get started here.
Yeah.
The Traders Expo is going to be in Vegas next week, and Wednesday through Friday. And I know Andrew, you're set to give a talk out there, right?
Yeah, I'm speaking Thursday morning. We also have a kiosk there.
Okay, great. Are any of the rest of you going to be out there for that? Okay. Well,
nope, not going.
All right. Well, I also know that Dave Landry and Rob Hanna, who are regular guests or regular hosts of the show, are giving talks, as well as Eric Atkins. He was a recent first-time guest. Todd Gordon, Rick Sadler, and Stephanie Kammerman, who's going to be on the show next week, actually, for the first time. So be sure to check out their Andrew's talk and the rest of them if you are attending the show. So okay.
Yeah, great. Yeah, I'm starting to regret that I didn't sign up for that, and I may start going next year. Sounds pretty interesting. All right, the big question number one. We'll just go through the list again. Go ahead and answer question 1 and 2 together. The first question is going to be, what direction do you think the S&P 500 index will move this coming week from today's open until Friday's close, and then your confidence. And then we'll go back around after that, and we'll talk about your reasoning for it, and that's a chance to show any charts or analysis you have. But let's just go through and answer question 1, what direction S&P going to go, and what's your confidence in your answer? And we'll keep that same order. So Roy, where's it going, man? What's going to happen? Uh-oh, might be on mute. Well, while Roy's working it out, I'll jump to Andrew. Andrew, where are we going?
I think we're going lower. I think the short-term top is in here at 2180. I was watching the S&P 500 futures trade, and then they were down over 100 points. I'm sure we talked about this last week, how much volatility we got through the election, and then they started saying, oh, maybe Trump's not that bad for the economy. We see the bank stocks absolutely on fire. JP Morgan up to close to $80. I mean, all the bank stocks are just unbelievable. There's a huge rotation going on, and this rotation can last for a very long time. You look at Apple today, you look at Facebook, you look at Google, Amazon, they're all getting crushed, and all the ones that are going higher is the AK Steels, US Steel, and the bank stocks. So it's a huge rotation and shift. We also see the interest rates going to about 2.2% on the 10-year, which is interesting. So I think we're headed lower, and I would say about 60% chance.
All right, lower, 60%. All right, some good talking points there. Roy, are you back yet?
He just left the room, so I think he's having some technical difficulties. Hopefully he'll be back in a second. But
okay, yeah, we'll just keep rolling here. Steve, where are we going from here?
Okay, thanks. I'm going to say lower at about a 65% chance. Confidence level. I can show this later, but when you look at this particular market condition, it's occurred 85 times in the past, going back to Jan of 2000. And when you look at the price distribution of each of those 85, it averages out to where there's a bearish bias going on there, a bias towards lower market volatility than what we've seen here recently, which won't be too hard to achieve because it's been so volatile. But there's a slight bearish bias when you look at the past, and so that's my answer anyway.
Okay.
And Roy,
we got 2 for 2 right now.
Roy, are you there? Looks like you just unmuted yourself. Can you hear me? All right, we're not able to hear you if you're talking. Might need to restart your computer or something.
All right, should we keep rolling with Jody?
Yeah.
Sure.
All right, Jody.
So I think higher with a 60% chance.
Higher with a 60% chance.
Yeah. And I'm just seeing, and I'm seeing a nice Elliott Wave pattern. I think we come down first, but I don't see, I see us closing the week higher, although we do have some important numbers coming out this week, like CPI. But I just see what's going on with all the markets are a little bit stretched, the dollar, the S&P, but I don't know, I have to go with that.
Outstanding. It's always a little more fun when we have some controversy and respectful debate about what's going on in the market. So awesome. We got 2 down, 1 up. I don't know if we got Roy back yet. I don't hear anything from Roy.
Yeah, Roy, are you there? Yeah, I'm not sure what's happening, but Roy, we still can't hear you. If you're able to hear us, like I said, you might need to actually restart your computer.
All right, so I'll weigh in with my opinion. I think it's going down. I think we're going down from here, and I give that a 70% chance. So I'm pretty, I got a pretty high confidence in that. And I'll show my analysis on the chart as well. I like to use a 60-minute, the ES 60-minute S&P 500 futures chart for these predictions for the end of the week. And I think I see a pretty clear pattern there. So again, I'll show that when we get to that stage. But I'm down, going down with a 70% confidence. So we got 2 down, 3 down, 1 up, and we'll see if we ever do hear from Roy from Steady Trader what his thoughts are there. But we're going to move on now, and this is where you have a chance to really expand. And by the way, the report, the survey, 70% of the people said, responding to the survey, said that it's going higher, and they had an average of a 70% confidence in that. And David's analysis using all that was a 55% chance lower based on historical results of the survey. So there's another data point as well. But let's go back through the list, and this is a point where you can expand on your reasons for your answer and your probability, and to share any kind of information, charts, whatever, to support your case. So we'll go ahead and jump to you, Andrew.
Yeah, as I kind of talked about the shift in the rotation, we've now seen oil down about $2.25 in the last 2 trading days, and all these Momo names, otherwise known as the FANG stocks, have getting hit really hard. So, I see that tail at 2180 that we hit from 2 days ago, and we're seeing a little bit of selling pressure. We saw the S&P 500 futures up over 12 points overnight, couldn't hold a bid and has now reversed. So I think that at some point these stocks have just gotten plowed into, U.S. Steel, AK Steel, and all the bank stocks too, will reverse. And once those reverse, I think we're going to come down pretty hard. It's so interesting that everybody thought Trump was bad for the market, and we've actually rallied since he got elected presidency. And now they're saying, oh, maybe he's good for infrastructure stocks. But the rotation is more interesting to me than the actual over market. If you look today, the S&P is only down like 3 points, but you have Amazon down 20, you have Google down 20, you have Apple and Facebook down about 3.5% each, where they were earlier. So the rotation and the shift is more interesting, and I want to get short the names that are going down. I traded MasterCard earlier. That one's down about 4% today. But keep with the rotation of what's going on.
Okay. Excellent. I know several people went pretty public. Like Mark Cuban was probably the vocalist, the most vocal, saying if Trump gets elected, the market's going to crash. Those are opinions, right? Most of us are technical traders to a degree. Opinions matter, but ultimately the reality of what's going on the charts rules. So, Steve, you want to expand on your prediction for being down there?
Roy, are you there now?
Okay, Dean, let's see, Steve here. I'm going to try and share my screen if I could. I'll just click screen share and hope this works, I guess, right?
Yeah, it usually does. It works pretty good.
Let's give this a shot. Let's go to this. Start screen share. There we go. Can you see my chart?
The chart.
Perfect. All right, so what I like to do, and I call this volatility edge analysis, is I like to use volatility bands from each close, set 5, 10, and 15 days on the upside and the downside, and I use a 20-day historical volatility to determine the width of these bands. And then what I do is I go in the past and I just log how often price will go up and strike the 5-day band on the upside within 5 days, or the downside 5-day band within 5 days. And then I do the same for the 10 and the 15. And then, when we have a certain market setup, I look at the price, that kind of price distribution from that similar market condition that we have at that given time. And so when I pull up the statistics, and hopefully you're looking at my Excel spreadsheet here, we have a current
still on the chart. Still
on the chart. Okay. Okay. So let me see now. How do we do this? I can click on screen share, right? Let's do this. And here, let me click this. There we go. All right. So now you should see my Excel spreadsheet. We have current market condition. And I define the condition in terms of price action, just an upswing bar, higher high, higher low, and then an inside bar from Friday. And then I define it using a trend. We're above the 50-day average. And then we have this 15.33 stochastic, which is basically in the overbought region between 60 and 99. And we're above the 3-day, the percent K. So that's a unique market condition that's occurred about 85 times in the past or so. And so when you go down here, I generate this report every weekend, and you can see it for free at our Discover Options YouTube site. But what you're looking at here is just at the top right here, the percent of times over 4,200 closes that price hits the upper 5, 10, and 15-day band. and then the lower 5, 10, and 15-day band. And it varies pretty much between 23 and 32%. And that's expected. Price will strike a 1 standard deviation that level. Now, when you look at the 85 times that this same condition has occurred, you'll note that those 85 times, it has struck the upper bands far less often than the baseline by quite a bit. It has also struck the lower bands less often, but not by as much as it's failed to hit the upper bands. So this is just a way of looking at the past, and the likelihood then, if the past holds true, the likelihood is that we'll have lower market volatility with the emphasis on the towards the bearish side, that those upper bands typically get struck less often coming off of a condition like we're in now. And so that's why I emphasized, the bearish side, 65% confidence. I also recast the bands using a VIX, a skew adjusted VIX, and it's the same picture pretty well down there. So that's my reasoning, just looking at the past with this condition and looking forward. If the past holds true, lower market volatility you got to lean on the bearish side there.
All right. So we got a real statistics and spreadsheet jock in the house, man. I love it. Yeah, very good. Thank you. And Jody, if you'd like to expand on your reasons, you said it's going up at a 60% confidence. The dissenting voice.
Okay, the dissenting voice. Yeah, okay, let me show you my
Make
screen.
your case. Make your case. Might convince us all.
I don't know about that. Okay, do you see my screen? Yeah.
Yeah.
All right, so what we have right now, today, and towards the end of last week, is a risk-on environment. Now, trading Forex, I look at risk-on and risk-off. So risk-on means selling yen, buying stocks, and I'm just generically saying buying stocks. I realize we're talking about the S&P, and Andrew spoke about the rotational moves. Absolutely, that's going on. And selling gold. So selling yen, buying stocks, and selling gold. The risk-off trade is buying yen, selling stocks, and buying gold. So what happened since the election results is we moved to risk-on. And this is a chart of the dollar yen. It's a weekly chart of the dollar yen. And with the S&P overlaid in green, you can see that. So the S&P and the dollar yen for a very long time followed each other, okay, in this risk-on environment until the beginning of 2016 when they diverged and the market went for cover, gold went up, yen strengthened. We were on more of a risk-off environment than anything else, but the S&P continued to move up as the market was looking for rate hikes, et cetera, which never happened, and which is now being priced in for December, well, a December rate hike. I guess there's the market is pricing in an over 85% chance for that. So looking at this and talking about from Monday to Friday, I'm thinking, okay, I wouldn't buy the dollar yen up here. I was looking, we've accelerated against the dollar in all of the dollar currencies. And the S&P, I'll tell you what the view is on the S&P. It looks like it's rounding out here, and why it's not impulsive. Why would you want to buy it? But let's just look at, that's the dollar yen. Okay. This is our wave count on the S&P, that we see it moving up a little bit more, not a whole lot, and then we see a major correction. So for this week, this is the hourly chart. This is our pattern. I still think that the risk on trade will be valid for the rest of the week. And this is, I don't know if you can see this on the left. Let me just move it. Okay. We had an impulsive move up for the S&P, and this was after the election results, after an impulsive move down, but I'm just focusing on this move up. And what we've seen since is, yeah, we reached a high, and then we've consolidated. We've traded sideways. So this is a three-wave Elliott wave pattern for me. So once we bottom out for the C wave down, which will be a small b, so we have A, B, C, that's the ultimate pattern, I see us trading higher and making a new high, and maybe that'll be it for the S&P. But you asked this week, and that's what I think for this week.
Okay, outstanding. And it's fun to see, like I said, another Elliottician giving their opinion. So I will go ahead and share my chart now. Let me see if I can do that. Let me, button clicked. Uh-oh. There we go. Okay, hopefully you guys can see my chart now. This is the S&P's futures 60-minute chart. And no surprise, looks very similar to Jody's. I agree with your weekly chart on the S&P, Jody. I think we are at the top of on the weekly chart, a wave 3, and we got a pretty good size correction coming, and it's going to be very tradable and very profitable to the downside. Here on the 60-minute chart, I think this is a good time frame for looking at the weekly predictions. And as I said before, I combine Ichimoku Cloud with Elliott Wave. And so the Ichimoku Cloud projects several bars out into the future what the predicted support and or resistance areas are going to be. And you can see, through that impulsive wave up post-election, the Trump bump, as they're calling it, right? We had a huge support area generated, but as the market has begun to consolidate, that's gotten very, very thin, and that's typically where price breaks through. And we've made just recently lower low, lower high, new low, and we see momentum in the oscillator starting to diverge in a bearish direction. So I'm actually looking, if I just use a Fibonacci retracement line on this impulsive wave here. Wow, my tool just right here in the middle of the broadcast decided to freeze up. Very nice. So we're looking for a 38.2 to 61.8 retracement from this impulsive move, and it looks like we're losing support. And that's going to take us down into about the, 2120 to 2100 level. There I go. Got my tool. There, I was about right. Yeah, 2120 down to 2080 is the range. So pretty dramatic, but I think I'm pretty confident. I said about 70% confident with that retracement. And so that's what I'm looking for, and that's what I'm basing it on, is a combination of the Ichimoku Cloud and Elliott Wave count. Did we ever hear from Roy? Did he ever get things worked out there?
Roy, are you there now?
I see his icon there, but still no audio. Okay, well we'll just keep plunging ahead here. So the next question, and this one's really interesting. I'm going to be taking notes here. I got my ideas on this, but the question we asked was in the survey was, what companies and or sectors do you think are going to win, and which ones are going to lose in a Trump administration, and why? So the survey respondents had lots of ideas here. But let's hear from some of the panel participants. What do you think? What are the winners and what are the losers going to be as we move forward in a Trump administration? And what's your rationale for that? And we will go with Roy. No, we won't. We'll go with Andrew.
Yeah, I mean, the season, the rotation has already started, and it's just the question of how long it lasts. I've been trading for 14 years every single day, and I've never in my life seen a rotation like this. Like JP Morgan does not move from $70 to $80 without any kind of an announcement, unless it got bought out by, when they merged. So the bank stocks are just incredible, and I think for the meantime they're going to get bought on any pullback. So what's going to win right now? It looks like banks, infrastructures, the steel stocks. What's going to lose is some of those stocks linked to Obamacare, and I don't know how long it lasts and how high it goes. But the rotation is on, and it's unbelievable and crazy to think about these bank stocks. I mean, Bank of America went from $16.50 to $20, and this doesn't normally happen. So who wins right now is the bank infrastructure. Who loses is anything linked to Obamacare. How long this lasts, I don't know. It depends how many times Trump's going to change his policies on everything. But you got to stick with what works. Buying pullbacks in any of these names makes sense.
Okay. And there's no chance of Trump changing his mind on anything, right?
Oh, no, probably not.
Yeah. Okay. Steve, what are your thoughts here? Who wins, who loses going forward?
Well, I'll be honest. This question's a little bit out of my wheelhouse, but I have been watching quite a bit the campaign and the election. Certainly, I agree with all the infrastructure discussion here in the comments. I think one area that's perhaps under the radar a little bit could be defense. He's always mentioned beefing up the defense, and I think that might be a little bit off of folks' radar right now. But there's certainly perhaps some opportunity there, and there'll be an area to certainly watch as well.
Okay, I've got my eye on defense and aerospace as well. I think that's a sector that could really benefit. And I'll talk about that because in question 5, we're going to be asking, your favorite trade right now that you would share with people. But Jody, who do you think wins, who loses here in the
this is
new
what
administration?
This is what I wrote down yesterday. Just based on his policies, lower taxes, higher government spending, especially on infrastructure with less regulations, basically the same as what you guys have been saying, industrial sector, and within that, the transportation industry, financial stocks, because of higher inflation potential and steeper yield curves, and perhaps clean energy stocks should suffer.
Okay. Yeah, pretty consistent. So my opinion, I like defense and aerospace. I think, and I'm already starting to look at some plays there. I like Lockheed Martin right now. They got a pretty good Elliott Wave pattern forming already, and this could add some fire to that, some fuel to that next impulsive wave coming. Clean energy. It's funny. I've been tracking solar stocks for a long time, and lower they'd be out of business. Right? So they don't have much room to go down, and who knows whether something could cause a corrective wave up on those. But they already were so deeply out of favor. A Clinton win would have certainly probably triggered a rally in those, but I don't know where they go from here. They're already so low. And I think I'm tracking very closely. I just published to my subscribers. We're going long on China and emerging market bearish ETFs. So we think that's going down, right? And it's already started with the election results. So we think taking a bearish play on emerging market and China ETFs. So we're closed by going long on bearish ETFs, and there's some really, really nice 3x option plays in that space. All right, so the next question is if you have a favorite trade or pick right now that you'd be willing to share with the folks listening in here. And we will just stick with our rotation and kick that off with you, Andrew.
Probably Roy, one more time. Are you there?
Can you hear me now?
There he is.
Yeah.
Okay. 3 reboots. What? Anyway, I lost everything when I rebooted, but I'll just go back and say my prediction is up 80%. We have a proprietary way we measure momentum, but it's pretty classic. I mean, we use wildest numbers. We use order book, price volume stuff. It's all price volume. And I've got the highest rating yesterday that we've had in 3 months, because we were basically, for 3 months, we were kind of, I call it election paralysis. And that's over. So again, I'm sticking by my prediction. I really think the market is going to go up this week and probably for a few more weeks. Other than that, I would agree with a lot of what was said. We've got a complete reshuffle of the market. Different industries are in favor. Different industries are going to be out of favor. And I think that's all good for this lame duck season, because what you're going to see is a lot of movement, which is what we haven't had. And my motto is all movement is good movement. movement is good movement.
Amen to that. Nothing worse than trying to trade a sideways market.
Right.
So what sectors do you think benefit going forward, and which ones are going to get hurt?
Well, I think it's it's all been said. We really don't know exactly what the policies are, but anything to do with building construction, military, fossil fuels, all the things that Trump has championed during his campaign are likely to get a boost. And we'll just have to see. Of course, we just don't know how any of that's going to play out in the practical world with the Congress yet. So that's why I say for now, there's just going to be a lot of speculation, a lot of movement, a lot of people reshuffling. And I mean, we don't really go for sectors. We just look at stock price movements at events. We don't try to look at fundamentals. We just look at the momentum, price and the volume. And if it's whatever it is, wherever the sector came from, we're agnostic. We really are sector agnostic. I don't try to pretend to be an analyst because those guys spend hours and hours and weeks and months, just looking at one particular narrow slice. And I don't do that.
I'm with you, man. I'm with you. I trade individuals, sometimes ETFs, but individual stocks as well, and try to make option plays on those. I use sector information to draw my attention to individual stocks, but I think I'm with you, and I like some of your comments. I think we're in agreement. I trade the reality of the market, not what we think it's going to do, not what it should do, but what is the reality, right? Of price and volume. Price and volume are the only realities in the market. Everything else is a derivative or speculative work.
Exactly. Right? And I don't have a chart because, again, I had to reboot a few times, but Agility Holdings is my trade of the day, EGL. It was up 7%. We got into it Friday. We got 7%. It's up around 11% now. It's looking like it's got a little bit more legs to it.
Okay. Very good. All right, so we'll go. Andrew, you got a favorite trade right now you'd like to share? Uh-oh, one of those days.
Hangouts are not cooperating today.
Sorry about that. So I trade in and out a lot, but what I'm looking at is XOP, big institutional buyer, December puts. We saw the DEES36 puts, DEES34 puts. So I'm long the DEES34 puts. I'm looking at them right now. They're about 76 cents. So my delta would be short, my gamma would be long, my theta would be short, and my vega would be long. So DEES34 puts, I think XOP can test back down to $34.
All right. Very good. Steve, what do you like right now?
Well, something we like to do is non-directional trading with condors and butterflies, but a derivative strategy from that. I just call it a hedged bull put spread. And so if you're out in December and you're trying to figure out, well, how far out is a standard deviation, I like to take the VIX and carve it up into two parts, an upside VIX and a downside VIX, because the options are priced differently in the calls than the puts. The implied volatilities in the calls are much lower than in the out-of-the-money puts. And so when you skew it like that, that puts us at a standard deviation down at maybe the 2060s in December for the SPX. So if you sold those and bought the 2040s, that brings in a nice credit. But it's just that we want to hedge that downside that can always bite you. So we would do a one lot, maybe say at the, buying the 2165 put and selling the 2155, a one lot versus a 5 lot bull put spread. Something like that gives you about an 8% yield if the market goes up, and you don't have to worry about the market blasting off like you do in condors and butterflies. And then on the downside, if it goes down, well, that hedge kicks in. And as long as it doesn't go past, say, 2056 by December 16th, you're good, and you make the full amount of the credit, and the debit spread brings you in money as well. So it's called a hedged bull put spread. Those are the numbers as we are speaking now.
All right. Very good. Jody, What do you
Well,
like?
what do I like? Okay, so we don't really talk about stocks too much. We talk mainly about Forex trades. So I might say some things and some of you will be thinking, all right, well, I'm not looking at that. I don't know what I should say. Okay. I'm long the Aussie New Zealand dollar, long Aussie, short New Zealand as a cross. And I see a really nice pattern. We've been discussing this in our rooms for a very long time. And that is a nice trade to stay away from the straight dollar moves, which I think are really, really stretched at the end of last week and today's moves. But the other trade that I am looking at, but it's really not a good level to buy right now, is the pound yen, but it is stretched. And that's also because of the pound on the Brexit side, that the pound it got an additional boost from talks that Trump would be a better ally to the UK than the Democrats in general, and that there would be an earlier and better US-UK trade deal. So thus improving UK's position in Brexit negotiations. So I think the combination of the risk on and the Brexit, the pound thing, that is making the pound yen attractive. But again, it's stretched and not at these levels. Would look for a nice retracement for that one.
All right. Thank you very much, Jody. I was looking earlier. I was in my trading room. Folks asked about the dollar yen, and I thought that was a pretty nice trade. We were looking at that a couple of weeks ago, but I don't trade Forex, so thank you.
Yeah, exactly.
For that.
The dollar yen, it's a nice trade, but it's too stretched right now. It reached the first target today, so exactly.
Right, already kind of done, huh? So here I'm showing my screen. Here's a trade that we like right now. We took this trade last Friday, but there's still a pretty good entry on it. This is Clovis Oncology, kind of a small cap biotech. It's got a perfect Elliott Wave pattern here. We traded actually wave 3 here. We caught it coming out of a channel. We got about a 55% return on that one. It's had a super nice, perfect wave 4 retracement, and wave 5 is underway. And we got a Fibonacci extension zone going up to 42.14 to 51.96. Sitting here at 35.36. We got our stop just down here at 25. Looks like 25.80. So still a pretty good return to risk on this trade. We're in it. We got 5 or 6% profit in a couple days, and this one's off to the races, so we really like it. And I said before, bearish on China and markets, so we're trading the bear 3x put on the one we like there is Yang, YANG. It's a pretty good instrument, and that's got a nice option market. There's also some good directional call options here on CLVS, and looking for a trade confirmation in Lockheed Martin, defense aerospace play, as again, like we had all talked about, a sector that has potential, a real potential there. All right, Roy, you already gave yours, which was Agile. So this is the point here in the show where we just ask everybody, give your closing thoughts, and if you'd like to talk about your website, give a URL or a link, or show that would be outstanding. So we'll just roll back here. Roy, if you go ahead and give your final comments.
Well, again, we're journeyman traders here. We go out and we look to make 2 or 3 trades a day that give us 3, 4, 5, 6%. Roll them over every couple of days. And the last 2-3 months have been frustrating. Our portfolio is up, but the markets have been locked in fear, as everyone knows. We've been happy for a week. We've had trades, in double digits, 10, 20% in like 2 or 3 days. They're just piling in because there's pent-up buying, there's pent-up speculation, there's pent-up everything. The dam is broken. I don't really pretend to know what's going up and what's going down. Again, we just look at every day. We scan for what's got the price action behind it, and they're coming from all over the place. But the important thing, though, is that the market is alive now, and people are acting on the change that has happened and will happen. And it's like they say about PR, right? All volatility is good volatility from our point of view. We trade them going up, we trade them going down. The thing that differentiates us is we get in and out in 2, 3, 4 days. We just don't hang around and wait for the next reversal.
Very good. Yeah, the volatility is nice. I actually had my trading room open as the election results came in. We had a marathon 10-hour session, and that was actually really fun. And we made some really good trades.
Yeah, it's been fun. Exactly. It's alive again.
Yeah, it's no fun to sit there and watch, the thing go sideways and absolutely nothing happened, and it just takes extreme discipline, and it's a drag. So that was a lot of fun on election night, and since then, yeah, we've had some real excitement. All right, Andrew, just any closing thoughts if you'd like to tell us more about Alpha Shark, how people can get more information?
Yeah, like I said, I will be in Vegas at the Money Show. I have a kiosk there, so feel free to come by the kiosk, say hi to me. If you have any questions about my trading, I have a very unique trading style, which is I watch institutional order flow in the option market, and I allocate all my capital on what the institutions are doing. Options are either used as speculation or hedge, and I try to figure out what are speculative trades versus hedge trades, and it's been doing pretty well for the last 14 years. As I basically took what I learned on the trading floor and moved it upstairs. People can email me whenever they want, Andrew@alphashark.com. And I wish everybody luck trading, and thanks for having me on again.
All right. Thanks, Andrew. Glad to be here with you. Steve, if you want to wrap up.
Sure. Thank you very much. You can get more information if you're an options trader, particularly a very advanced options trader needing the best analytics. OptionVue with a VUE, you can go to OptionVue.com. And just know that our software has occupied that highest level of analytics since 1983. And some of the horizontal skew modeling we do is second to none. And then our educational arm is DiscoverOptions.com. You could go there and look at our curriculum. And we specialize, again, in the one-on-one mentoring approach. We don't have classes with multiple people. It's exclusively set up where you meet with a mentor. Look at a recording first, do some homework, and then you meet with them over the phone with conferencing software to make sure you're getting the concepts. And thank you again for having me on. I appreciate it.
All right. Good to be here with you. And Jody.
Okay, I'm going to try to show my screen here, but I think I have it on the wrong. Let me just see. What do you see?
We see your webpage. We saw a webpage.
Elliott Wave Desk. You see my screen?
Yeah, I see it.
Okay, so we are offering a special. This is the special. Well, this is what I want to show you. We have a scanner, and it's based on our wavy tunnel strategy, which is an Elliott Wave-based strategy, which I didn't really talk about. But we have a stocks heat map, a Forex heat map, and a CFD heat map from the weekly on down to the 5-minute on 100 different stocks. So if you pull down to JP Morgan, which I worked there for 15 years, you see it's all blue. So that means that every single time frame is bullish, and that was what was spoken about. So this is what we have. So I'm going to throw this in with our offer, which is a 4-module course and 1 month of our wave counting service on 13 different markets. And the markets are on 6 different currency pairs, 5 different stock indices, and oil and gold. So the website is fxtradersedge.com/seminar. And it's $17 for the seminar, 1 month of the Elliott Wave Desk, and I'll throw in the scanner as well, which is really very interesting based on our wavy tunnel strategy from the weekly on down to the 5-minute, since mostly everybody is trading stocks here. So that's it. And again, just to sum up, are we on a risk on or a risk off environment? For how much longer will this risk on environment continue? That's really what I base my analysis on and what I base my trades on.
All right. Thank you, Jody. It was good to meet you, to be here with you. And again, I'm Dean Jenkins of FollowMeTrades.com, and you can just go to my website, FollowMeTrades.com, and we've got our trading results for the last several years, as well as year to date, and details of every single trade we've taken, and we've been consistently profitable while maintaining risk. I'm a big believer in very strict risk management rules, and more product information is there on the page as well. So I invite you to check it out. There's a free newsletter you can sign up for. Give a weekly market analysis called Beyond the Noise. All right, well, it was great being here. I appreciate all the rest of the co-panelists. It was great hearing your ideas and your predictions. And I think that's a wrap. So I'm going to send it back to you, David.
All right. Thanks, everyone. Great show. Just want to remind everyone watching that if you haven't yet, be sure to subscribe to our YouTube channel so you can get updates on future shows. Also, you can go to TimingResearch.com and you can download any of the past reports or watch any of the past shows there. And be sure to join us next week. Stephanie Kammerman is going to be on the show for the first time. Also, Barry Rosen is going to be on for the first time. And Jason Pierce, Anka Metcalf, and Dave Landry will be joining us again. And so I just want to thank again all my panelists for this week. Jody Samuels of FXTradersEdge.com. Thanks for being on for the first time. And Roy Swanson of SteadyTrader.com. Andrew Keene of AlphaShark.com. Steve Lentz of OptionVue.com, and Dean Jenkins of FollowMeTrades.com. Thanks, everyone.
Thank you so much.
Thanks, David.